Thank you for joining us at Midwest BankCentre. We're excited to get on our topic of PPP loan forgiveness. And I'm going to go ahead and kick it off to Greg to get us started. Greg, are you there?
I am here. Well, good morning. My name is Greg Schaller, and I'm the Chief Risk Officer at Midwest BankCentre. First, I want to welcome everybody here to what should be a very informative conversation on PPP forgiveness. I also want to thank you for being a valued customer to Midwest BankCentre. Today, we will be providing you an overview of the PPP forgiveness process. We have put together a presentation that will provide some great insight around the PPP forgiveness process. This includes some up-to-date guidance as well as best practices that we've seen so far. MBC is pleased to have an incredibly knowledgeable group from CLA here to walk us through this complex and at times confusing process. Before we turn it over to the CLA team, again, if you have questions, please utilize the chat feature in the WebEx. And again, we are still getting a little feedback, so please mute your phones or your computers. At this time, I'd like to turn the presentation over to Tim O'Shaughnessy, Managing Principal of the CLA St. Louis office. Tim?
Thanks, Greg. Can you hear me okay?
Yes.
Okay, perfect. Well, thanks again, and welcome everyone to joining us here this morning. As Greg mentioned, my name is Tim O'Shaughnessy. I'm the Managing Principal of the CLA office here in St. Louis. First of all, special thanks to Greg, Aaron, Nicole, and the rest of the Midwest Bank team for allowing us to participate in this webinar. For those who are not familiar, we at CLA are a professional services firm that exists for one reason, and that is create opportunities for our clients, our people, and our communities through our industry-focused wealth advisory, outsourcing, audit, tax, and consulting services. And when you dig deeper into that, one of our four strategic advantages is really of our firm is we consider ourselves the premier resource for privately held businesses and their owners. And I believe that this topic today and the depth at which we have as a firm with Jack and Rick and Jen have dove into this PPP and really led this from an industry perspective throughout this challenging time in our country really supports that strategic advantage. Our hope as a group is that this presentation this morning will bring some clarity to you on the PPP forgiveness process and help you navigate these rules. With that, I want to turn it over to our host, Jen Rowan, who I will let introduce herself. Thanks again to Midwest Bank for allowing us to participate this morning and everyone for attending. Jen, take it from here.
Thanks so much, Tim. Everyone, it is an absolute honor to be here. So to echo Tim, I want to thank the folks at Midwest Bancorp for inviting us and to all of you for your attendance. By way of introduction, my name is Jen Rowan. I lead the business incentives consulting practice here at CLA and have been privileged to work with Jack Rybicki and Rick Kruger since the beginning of the COVID economic relief story. So as our journey has taken us farther along the way, we're now at a point that we're talking about forgiveness and answering many questions that keep coming up in not only a pandemic world, but also kind of what we're dealing with post-election. As a bit of housekeeping, I'll tell you the process for today's call and the content, just so you know what you're in for. Rick Kruger is going to really work with us in the first few minutes talking about the forgiveness calculation. Then he'll hand it to Jack to answer any questions about the process of forgiveness. Then we're going to bring Greg back in to talk about the Midwest Bancorp forgiveness platform, which is going to be important for all of you who have received your PPP loans through them. And then we're going to come back to Jack to discuss forgiveness timing. We do want to make this a very interactive session, so my job here as host is just to help them navigate the conversation and your questions. What I'd encourage each of you to do is open the chat feature on the right-hand side of this meeting, and there's a little place where you can enter your questions into the chat. To the extent that we know the answers, we can answer them within the chat, but I will also be pausing the presentation to throw quick questions in to Rick, Jack, and Greg. So with that, I don't want to take any more of your time. I just very much want to say again, I appreciate your participation, and we're really looking forward to a very interactive session today. So Rick, why don't you get us started?
All right. Thanks, Jen, and thanks everybody here. So I'm going to go forward a couple of slides, and like Jen mentioned, we broke the presentation down into a couple of parts. And I know most of the people on the call here really are interested in the how do I get forgiveness, that we're at that point in our loans right now where we really want to make sure we're getting max forgiveness, getting this done and behind us. But before we dive too deep into the process, we thought it'd be helpful to begin talking just a little bit about how forgiveness works in the first place so that we have a common understanding around that. We do have the chat going. I'll try to keep an eye on it, and Jen usually does a nice job of jumping in and helping to maybe shift me if you guys have more questions on one area than another. So definitely encourage you to use that. I do plan to go through these slides pretty quickly though, knowing that we really want to focus our time here on the process of how do we go about getting forgiveness. And a lot of these slides, or all of these slides rather, are going to be takeaways for the group here. So you can always go back and reference some of the material. So I'll try not to just read from the slides here. All right, that said, before we go any further, the first thing that we wanted to start off with here is just showing you how the forgiveness calculation works, the very basics here. So on the chart, kind of the eye chart rainbow that we have up here, I'm going to break this down because this is the basic forgiveness calculation that the SBA has given us. So ultimately what SBA says, and this is how it's laid out in the application, is you're going to compute three different figures. And that's the three different columns here. You'll take the lowest of those three figures and then subtract out any EIDL advance that you received, which is the up to $10,000 amount. And that's ultimately what SBA is going to fund the bank for your forgiveness. Now, walking through each of these columns quickly here, the first one, and this really is the majority of the calculation, is what did you spend? So that orange box number one here, how much did the entity spend on allowable costs? You accumulate costs during your covered period, and then you potentially back out two reduction factors, which are the blue and green boxes here. So in box number two, you back out any large wage decreases of more than 25%, excluding your high earners, and you also potentially decrease FTE reductions. Now, we'll go through all of these in a bit more detail, but that's the basics for one piece of the calculation here. In the middle column here, that kind of brownish number 4 box, what's the amount of the PPP loan? This just makes sense. You can't get more forgiven than you took for a loan in the first place. And the third box on the right, the purple number 5, this is a requirement that you might be familiar with, that you need to spend a certain amount on payroll costs in order to be able to get full forgiveness. In other words, there's a cap on non-payroll costs of 40% of the amount of forgiveness. There is one thing that was newly added here, and again, we'll talk through the forms a little bit later, but if you are using the 3508S form, you don't need to worry about boxes number 2 and 3. So that's a great thing. That one less thing that you need to worry about if you're using that simplified form, that 3508S. No matter what form you use and no matter what your calculation is up above though, if you did receive an emergency injury disaster loan advance, so not just the loan, but the advance was the up to $10,000 amount, that is reduced from your PPP forgiveness. All right, so mentioned in that first column there, we had eligible costs was the first box there. So let's talk what are eligible costs. That's most of what you're accumulating for the application here. So there's two broad buckets that the SBA gave us for eligible costs: payroll costs and non-payroll costs. And we have some detail for each one of these. You tally up eligible items over your covered period, which is either a 24-week or potentially an 8-week period for some loans. You could potentially elect an 8-week period for some loans. Accumulate those and you can put those on your application. The covered period, here's just a little bit more detail. The 24-week period is available for all loans. Doesn't matter when you took it, all loans can take a 24-week covered period. towards the bottom, you can see some loans can optionally elect to use an 8-week period instead. I'll tell you from our practice and what I've seen at least, there are some borrowers who have elected the 8-week period. Not many, though. The vast majority of the loans that I'm seeing, at least, are applying using a 24-week covered period. The reason is you can accumulate a lot more costs, eligible costs over a 24-week period, which can help get your forgiveness amount higher. All right, as far as what payroll costs to include, and actually I'm going to back up a slide just to put up the different categories here again to make sure we keep this in mind. There's 4 broad categories of payroll costs. That first blue box on the left side here, basically, more or less, this is going to be your gross wages. There might be a couple of adjustments to that. The biggest one that they call out within the law is that if employees took leave under the Families First Coronavirus Response Act, the FFCRA, and that leave was eligible for tax credits, that's excluded from the gross wages that you report for PPP. But for most of your non-owner employees, it's just going to be gross pay, less that FFCRA. You also get group healthcare benefits, you get retirement benefits, and you get the employer portion of state and local payroll taxes. So for most employers, that's just going to be your SUTA, your state unemployment tax. Now the next question, bouncing back to the slide I was on a moment ago, the next question we often get is, okay, that's great. I get I have 24 weeks and I get that these are the costs, but what exactly do I put on the application? So I'm just going to point out a couple of bullets here that I think are relevant here. One of the biggest ones is the second bullet here. And the instructions for the form say that you get to include any payroll costs that were paid during your covered period or alternative payroll covered period. And you get to include any costs that were incurred during your period and paid by the next regular payroll date. So you have some flexibility. And if you think through that a little bit, for an 8-week covered period, that probably means you're going to have more like 9 or 10 weeks worth of payroll costs during that period. And Jen, I see you popped up. Anything that you're seeing?
Yeah, there's a question from Natalie just talking about payroll, what's included, and she's wondering if union benefit packages are associated with payroll are included in that amount.
Yeah, that's a great question. There isn't a ton of detail about what is or is not included when you talk about healthcare benefits or retirement. My thought would be, unless anybody wants to disagree with me, that yes, that would be includable. If you're paying things that are for healthcare or retirement, even if you're paying it through union contributions or kind of contributions to the union administering the plan, that would seem like an employer cost for that purpose and therefore eligible.
Absolutely. Thanks so much, Rick.
Rick, I'll just add that it's the employer portion. Any employee portion is not included in that.
Yeah, that's a great point, Greg, that we do get that question, especially for some of our self-insured plans as well. But what exactly do I put on here? Do I put everything that I'm paying for claims? And the answer would normally be no. You wouldn't put everything that you're paying gross to either an insurer or to kind of for claims. You put the net cost, the true employer cost. You don't get the employee cost because in theory that's already part of the gross wages that you're taking. The other thing that's worth mentioning here, I mentioned alternative payroll covered period. So what this is for payroll costs for borrowers who have a weekly or biweekly pay frequency. You can optionally elect to shift your period for payroll costs to better align with your pay periods. There's a bit more information in the application instructions, but it is a nice way to have a little bit cleaner documentation for some borrowers. If you can shift that, so rather than starting on your loan date for your covered period for payroll costs, you can start on your next regular pay cycle beginning date. There are some limits that we'll talk through in just a bit on the next couple of slides here, and these are worth keeping in mind as we think through what to put on the application. So there's maybe two broad buckets of limitations here. One is on what SBA terms cash compensation. So I kept referring to it as gross wages, but SBA uses the term cash compensation when they talk about this set of limits. There are two things to keep in mind with the limits and what limit applies to each particular person. One is which covered period you elect, 8 weeks or 24 weeks, makes a difference. You're generally going to get better treatment with the 24-week period. The limits go up higher. The other, though, is the type of employee. Non-owner employees have different caps than owner employees, general partners and sole proprietors. So just mentioning that here to make sure we're on the same page, for an 8-week period, nobody can get more than 15,000 or include more than 15,385 of cash compensation on the forgiveness application per employee. Owners have additional restrictions on top of that, which are based on their 2019 compensation, whether that's W-2 for an S-Corp, C-Corp owner, whether that's Schedule C or a K-1. There are some limits based or additionally for owners, basically saying you can't just increase an owner's compensation in order to get forgiveness, I think is SBA's theory. Those limits increase for the 24-week period. They increase generously for employees up to 46,154. For owners, not quite as much. In no case can you take more than 20,833 for an owner over a 24-week period, or 2.5 months worth of their 2019 compensation or compensation equivalent. For non-cash compensation, and SBA has an FAQ that breaks out what they consider cash versus non-cash, but health and retirement are in their non-cash bucket. Good news is there's no limits for employees. These are considered a non-cash benefit, not subject to those limitations. There are some limitations, though, for owners, which we have listed here. Self-employed and general partners are not eligible for forgiveness on these items. For owner employees, so that'd be your C-Corp, S-Corp owners, they may be eligible for some of this, but there are caps based on the prior year.
Rick, I think there are two questions that are coming through in the chat that I might toss your way as we're in this space. The first one was the cash compensation limits. Do they apply to corporations, including sub S?
Yes, they do, and only for certain thresholds. Though they did specify that you have to be a 5% or greater owner in the organization, but it does apply.
Okay, and then the next one, Jack's answered, but it's probably good to shout this out to the group. They paid a profit sharing plan contribution, which was for the 2019 calendar year during their covered period, and they were wondering if that was an eligible expense. So, it looks like yes, but just the employer portion. I didn't know if there was anything else you wanted to add to that.
Yeah, that's a great question. One we got quite a bit, especially early on with this. SBA did come out with a really nice FAQ where they gave one of their less convoluted answers to a question of, can you include payroll costs that were incurred prior to the covered period, but paid during the covered period? So 2019 profit sharing contribution might be an example of that. The question was, can you include those? Is it eligible? The answer was one word, yes, period. So they seem to be pretty straightforward with that even if it was incurred before your covered period, if it was paid during, you're okay including that.
Okay, perfect. And then the last one, and I'll let you get back to the presentation, but do the rules of attribution apply to C Corps or only the shareholder owner?
I'll give my 2 cents around this. So they have not gone into a lot of depth in terms of defining owners when it comes to this. That they make it really clear that if you own shares, that's clearly ownership in it. Other situations, I think it's less clear. If it's a relationship or if it's an indirect ownership, I think the safe answer would be to at least plan for some of that not being allowed and see if you can get to forgiveness another way. For example, if you were considering applying partway through your covered period and just barely making it with the cost that you have, maybe you want to extend it a little bit longer just to make sure you're going to be safe, depending on how SBA looks at some of that.
Hey, Rick,
Awesome,
this is
thanks.
Jack. The one thing I'd like to add on the C Corps, I mean, the main difference between an owner and a C Corp versus the other owners really has to do with, you know, healthcare costs and profit sharing costs, because in a C Corp setting, even if you're more than a 5% owner, your compensation is really W-2 wages to you, as opposed to, you know, an S Corp or a partnership where you're either going to get paid through a K-1 or you're going to get W-2 wages, but those will include things like your healthcare premium. So just know that if you're an owner in the C Corp, you still do have the ownership rules, but they're less complex to apply than you have in a partnership or an S Corp setting. Well, thanks, Jack. And thanks for everybody submitting these questions. This is good to dive a little bit deeper on whatever interests everybody. The other category here, shifting gears, we talked about payroll costs. Now let's talk about the non-payroll costs that are included in the application. A few main categories for this. There's 3 that are listed in the application, which are the first 3 on here: interest on mortgage obligations, rent, and utilities. And I'm going to point out a few things for each of these, and then I'll mention why there's a fourth box on here as well. So for all of these categories, one of the key things that you have to keep in mind is you need to have had these arrangements in place prior to February 15th of this year. New arrangements that were entered into on or after that date wouldn't meet the definition that's given by the SBA or the CARES Act around this. A question that we often get is, what is interest on mortgage obligation? This is one we watched really closely until SBA finally gave us some more information in an FAQ within the last couple of months here. It does seem like they're going to be fairly generous as to what's considered a mortgage obligation, and not just restricted to ones where there literally is the document titled mortgage within the debt arrangements. It seems like anything that's secured by real and personal property based on the FAQ is includable within that. Things that are unsecured, loan instruments that are unsecured are clearly not includable. SBA did say that unsecured loans are not includable for interest. There's maybe a few that live somewhere in the middle for different types of asset-backed lending, for example, on receivables. We're not quite sure what SBA has in mind for that. But for most loans that are secured by real and personal property, it does seem like all that interest would be includable. Couple of things that I'm going to point out here. They gave very similar timing rules as to what we talked about for payroll costs. So any non-payroll costs that are paid during your covered period are includable, and any non-payroll costs that are incurred during your covered period and paid by the next regular billing date are includable. An example the SBA gave to drive this home: for an 8-week covered period, utilities often are paid the month after they're incurred. In their example, you get almost 3 months worth of utilities for an 8-week covered period, because for that last one, you can take the portion that was incurred, prorate that bill, include the portion that was incurred on your application. One thing, though, that does seem a little bit clearer is around prepayments in this area. Prepayments on interest are definitely not includable. It's a little bit less clear on some of the others, but it does seem like advanced payments of those should not be included within the PPP forgiveness application. There also is the max forgiveness, like we mentioned earlier, the second to last bullet here, that at the end of the day, you can't get forgiveness on more than 40% of non-payroll costs. So the amount that you want forgiven, no more than 40% of that can be attributable to these non-payroll costs. So there's a natural limitation anyway. There also are limits if you rent your space from a related party. If you set up an LLC that has the same owner or something like that, there are limits there that restrict it to the amount of interest expense that the related party is paying.
Also, if you sublease or if you have co-tenants or anything that's shared like that, similar theory as to what Greg mentioned earlier, you're limited to what your kind of net cost is for that, what your true expense is, not just what you're paying to a landlord.
Yeah, Rick, I just want to add here that there are limits on non-payroll costs, but there's no limits on payroll costs. So if you use 100% of your payroll to obtain forgiveness, that is okay. And that's what we've seen. And so there's some strategy behind the 8-week versus the 24-week cover period. Because within a 24-week cover period, in theory, you should have enough payroll costs to cover your forgiveness balance. And therefore, you don't even need to worry about the non-payroll cost in those situations. So there is some strategy there too.
That's a great point, Greg. And I should have mentioned that too, because that's what we're seeing with a pretty high percent of our clients as well is, if you want to think what's the easiest path to full forgiveness, for many borrowers, it is I'm way over on payroll. Let's keep it simple. I don't want to pull invoices for every utility bill over a 24-week period. I can get there pretty easily with all payroll, and that's really the program objective in the first place was spending on payroll. So I think that's a great suggestion, Greg.
Yeah, and one other thing I'll add there is that you can pick the 24-week cover period, and let's say you get enough coverage in 12 weeks during that period, you can still use the 24-week cover period and just cap it at those 12 weeks. The only thing I would add there, it is prorated on employees. So those caps do change a little bit from that proration. But again, if you get enough payroll costs over 12, 14 weeks, you're good to go.
All right. Thanks, Greg. And so just to talk through a couple of other items that if we remember back to that first column of costs you incur, less reductions here, the two possible reductions that you're subject to, one is if you had wage rate reductions in excess of 25%. The other is if you reduced your full-time equivalent employees, your FTEs. So I'm just going to talk through these real quickly. The first thing that we have noted here, before we think through all the calculations, let's just think, do we need to worry about this in the first place? So there are a number of exemptions for the wage rate reduction test. First of all, there's a safe harbor. So even if you did reduce wage rates between February 15th and 4/26th, if you eliminated those reductions and got the wage rates back up by either the time you apply or 12/31 of this year, you don't need to worry about wage rate reductions. A couple of other situations, or I guess one other situation where you don't need to worry about it is anybody who was over 100,000 last year in 2019, you don't need to worry about it. The wage rate reduction test doesn't apply to them no matter how much they were reduced. And it's actually a fairly generous wording for employers that they give you with this one, where they say, if any single pay period in 2019, when annualized, exceeds 100,000. So, for example, you could have somebody who is making $1,000 a week, happened to have a little bit larger paycheck with some overtime, got up to $2,000 for a week. You take that $2,000 paycheck, annualize that, multiplying by 52 weeks, that would be over 100,000, and therefore you wouldn't need to worry about wage rate reductions. And also, if you reduce somebody by less than 25%, and again, this is wage rates. This isn't total pay to somebody. This is wage rate, so it doesn't get affected by hours with this calculation. If that does apply, there's a little bit of information on how you would calculate the amount of the reduction. Basically, you take the wage rate reduction in excess of 25%, multiply it by the number of hours they're working over your covered period. The other category of potential reductions is around FTEs. And again, I'm going to spend a little bit more time even talking through the exceptions here, because this is important to keep in mind. There are a few ways that you can get out and not have to worry about the FTE reductions. One is if you can certify that you simply didn't reduce the number of employees or the average paid hours from 1/1 of this year to the end of your covered period. I'll tell you, in my experience, I haven't seen a ton of employers use this, but it's super helpful for employers that might have maybe on the relatively small side of number of employees. So if you know what, had 10 employees going into this year, I still have 10 employees and they're still working the same number of hours, that might be a really easy box for you to check to say, all right, I'm good from FTEs and I don't need to go through all the details. Another one that we are seeing used pretty commonly, and we have another slide on this, is if you can certify that you are unable to operate at the same level of business activity. And the reason for that is because of some of the COVID requirements and guidance that was issued. And we'll talk through that in more detail. Another is if you had a reduction, but you got it back up. So maybe initially we didn't know how things were going to shake out. We saw a steep drop in revenue and we did do some cuts. If you got the number of FTEs back up by the time that you're applying, again, you'd be exempt from this FTE test. The way the test actually works, if you do have to go through it, is you basically calculate a ratio or a percentage of what percent do I have employed during my covered period versus what percent did I have in one of the reference periods, which is mentioned in the second to last bullet on the bottom here. So I did want to go through this business activity safe harbor in just a little bit more detail. It's important for a couple of reasons. One, it makes the FTE calculation a lot easier because it exempts you from it if this applies to you. And two, this potentially allows you to use the easy application form. So even if you have a loan over $50,000, if you qualify for this, you may be eligible for the easy application form. Like I mentioned, this comes into play if you had a reduction in business activity during your covered period and it stems directly or indirectly from COVID requirements or guidance that were issued. There's 3 federal agencies that were originally named by SBA, but they later clarified that this includes some of the trickle-down guidance that came out, that maybe HHS or CDC or OSHA didn't issue something directly impacting your organization, but maybe your state did, or your county did, or your city did in terms of restrictions that were out there on your business that caused a reduction in business activity. Now, SBA has mostly left this open for interpretation, so it's hard to go through specific facts and circumstances and say with certainty what does or doesn't apply, but they did give a pretty good example within some interim final rules where they said a business that had a portion of it was retail that was impacted by a shutdown order and had a reduction in business activity, that would seem to clearly apply then. I've gotten lots of other questions that I think fall somewhere in the gray. Not quite sure, but what we do know is what they're requiring if you want to use the certification. SBA said you need 2 pieces of documentation. One of them is you need to have copies of the requirements that you're citing here. So if you say something caused a reduction in business activity, you need a copy of what that is. And you also need your financial records handy. You need to be able to, it seems like you need to be able to tell a story of, here's the requirements that were issued, here's how it impacted my financials, and the linkage between the two is the story that you're telling there. Our best guess is that they're looking for some sort of decline in revenues caused by that guidance. Last thing I'm going to mention here from a calculation standpoint, if you do have to go through the full calculations for FTEs, SBA did give us 2 options of how to calculate that. One is the standard method, so how many of us would think about FTEs in the first place, where you assume a 40-hour work week. Anybody who works more than 40 hours in a week counts as 1 FTE. Anybody who works less than 40, you divide that into 40, and that's, if they work 20 hours a week, 20 divided by 40, they're a half FTE. You'd calculate that for each pay period and then use an average over your covered period or alternative payroll covered period. On the simplified side, simplified or not, they gave us another alternative for how to calculate this. You can use either method as long as you apply it consistently. For simplified method, again, anybody who works more than 40 hours counts as 1. If you work less than 40 hours, you count as 0.5, regardless of the number of hours. So somebody who's working 39 hours in a week and somebody who works 1 hour in a week counts as 0.5. You can calculate that for each pay period and use an average for your covered period or alternative payroll covered period. One thing I should also mention as we think process and transition over to Jack here when it comes to FTEs, as well as just payroll costs in general, it's definitely worth noting that a lot of the big payroll processors have some pretty good reports when it comes to this. So I know there's a lot of detail. We covered it, and it is important to know this because those reports aren't always perfect. But a lot of the payroll processors do have standard PPP reports that you can select, the ADPs, the Paychecks, the Paylocities, those guys that you can select, and it does a lot of these calculations. So if nothing else, it could be a helpful starting place for you as you're going through this. But with that, I'm going to turn things over to Jack here to talk a little bit about the forgiveness process.
Thanks, Rick. I appreciate that. I did want to cover just one question that did come up in the chat related to related party rents, because I know we didn't cover that in detail in Rick's presentation. But just for clarity's sake, if you pay rent to a related party and that related party has a mortgage outstanding, you will get to take some of that rent and include it in the eligibility calculation, but it will be limited to the interest that the related party pays. And so I gave an example in the chat. So if you pay $3,000 a month, for instance, to a related party, but the related party only incurred $1,000 a month of interest costs on the mortgage, you would be limited to including $1,000 as an eligible related party rent in your calculation as the borrower. If there was no mortgage on that related party's books, unfortunately, you would not get to include any of it. And if the mortgage interest was more than you paid, you would not get to include more. You would be limited on what you paid. So hopefully that was helpful there. So on the forgiveness process side, I'm just going to hit first on the 3 forms that are out there, because it is important to make sure you're choosing the correct form. And you've heard Rick refer to a few of these throughout the conversation. I'm not going to go into detail on the forms, but rather talk to you about when you would use each one. And then, I know we're going to have more details as the folks from the Bank Center go through the process. So for small loan, that box all the way to the right on the slide, there's a Form 3508S. And so that is applicable for loans that are $50,000 or less. And that's measured both at the individual level, but if you've got an affiliated group, so if you have a bunch of other related parties out there, you have to measure all of that together, and you can't be over $2 million in that affiliated group as well. So if you're less than 50,000 and your affiliated group is less than 2 million, you can use the 3508S form. And what this does is it does cut down on the type of documentation that needs to be submitted, but not dramatically. So it's not the panacea we thought it was going to be when we kept hearing about streamlined forgiveness process. So you do still have to report, your 4 basic types of costs that you've incurred during that period of time and have some certifications associated with that. So just be aware that, but there is still some reporting that goes along with the 3508S. Now, the other 2 forms are going to be used by everybody currently over $50,000. And those are either the 3508, which I'll call the long form, right? It's the most comprehensive form that's out there, or the 3508EZ form. And the 3508EZ form, again, is preferable to the 3508 from an administrative perspective. It does give you the opportunity to streamline the data that you have to supply to the bank and the SBA. However, you still need to maintain a lot of data on your side, no matter what form you fill out. But the EZ form specifically is used in one of 3 circumstances. So the first is if you're self-employed and you have no employees and you're above 50,000. I'm not sure that can actually happen now, but I think that that would be an easy application, or the 3508 S. Now, if you had no wage reductions greater than 25%, and you didn't have any reduction in the number of employees or average paid hours, basically during 2020. So you were one of those groups that either chose to, keep everybody paid and at the same rates of pay, and kept them busy so their wages didn't go down at all, then you would be able to potentially use this EZ form. Now, the third criteria is if you didn't have any wage reductions greater than 20%, and you were unable to operate at the same level of business activity. So that was that safe harbor that Rick mentioned earlier, related to the guidance out there from CDC, OSHA, and other federal agencies as implemented down at the state level. And so we expect that a lot of the people that are going to be using the EZ form are actually going to fall into that third bucket, which is we didn't reduce wages, either salaries or rate of hourly pay, more than 25%. And at some point in time during the covered period, we were unable to operate at a full pre-COVID level of business activity because of one of those conditions that were out there. And so that would be a situation where you could use the EZ form. Now, in that case, though, you're going to want to maintain all the documentation around we didn't reduce wages by more than 25%, because you will have to, or potentially have to, apply or provide that information. So it is important to have that handy. And if you use the second criteria, the no wage reduction greater than 25% and no reduction in number of employees or average hours, you really need to have all that FTE and payroll data available, because if that assertion gets challenged, you may not be able to use the EZ form, and you would get kicked into having to file the long form, the 3508 application. Now, the 3508 loan application is the most complex, and it includes all of those things that Rick talked about earlier in terms of applying the wage reduction test, applying the FTE reduction quotient, and that's where you would use those if you had those things that would reduce forgiveness potentially, of the eligible costs. And so it is very important that when you're looking at this, you understand which of these three forms is appropriate for you to pull together, because they all do drive different reporting requirements, and different data needs to be submitted along with those. So Rick, if you can go to the next slide, please. Wanted to cover just a couple other things that came out recently that we think will be helpful to folks. So there is a procedural notice that came out on October 2nd related to changes in ownership. And so this would be a situation if you are thinking about selling your business, buying a business that has a PPP loan on it, or even things like just changes in your ownership group, because maybe you have a retiring owner and you're going to buy that person out, and it's just among the existing owners, for instance. All of those things need to at least consider these rules around changes in ownership. And specifically, you always want to make sure you involve the bank, right? The bank being involved in the discussion related to changes in ownership is paramount, and it's required in any change in ownership situation. Now, what the SBA procedural notice gave us is when do we have to also go to the SBA and get them to approve whether or not a change in ownership can occur without it impacting the PPP loan forgiveness. And so in that case, you can fall out of the requirement to get the SBA to bless it, as long as you have applied for forgiveness prior to the change in control occurring, and you've escrowed the amount of your PPP loan such that there's really no risk to either the lender or the SBA that if the forgiveness gets rejected, for instance, those funds will be there and can be returned to the bank in that case. And so if you meet those criteria, i.e. you've applied for the loan and you've escrowed the funds, you don't need to get the SBA to approve the transaction. But if you don't meet those criteria because you don't want to escrow, for instance, SBA approval is required. And we don't really understand the full process for that. It did give us some procedural methodology that the bank has to help with that process. But we do expect that to get the SBA approval would be somewhat arduous, and we really are recommending that you try to meet the requirements to not need to get SBA approval if you are going through a change in ownership. Rick, next slide, please. The last item I'll touch on, and I know this is applicable to a small group of borrowers for Midwest BankCentre, but there was a new form that was introduced, the form 3508 or 3510, depending on whether you're a for-profit or nonprofit entity. And this form is really designed to capture some additional information that the SBA is going to need in order to assess economic necessity for those borrowers that are either individually or part of an affiliated group of loans over $2 million. Now, this form is in draft format right now. It is subject to comment period through November 25th. And we are hearing a significant amount of pushback related to this form in the marketplace right now. And so we don't know what ultimately is going to come of this form. But it is useful if you're in that bucket of loans over $2 million to look through that form. And if you are requested to prepare or provide the information currently, you have 10 business days from the request that you would receive from your bank to respond to that. But it talks about the, whether or not you had revenues similar to prior year, for instance, whether or not you started any capital projects, whether you've made distributions, asks information about people that are compensated in excess of $250,000. And just reading the form gives you some insight into how the SBA might be looking at, for these larger loans, whether or not economic necessity was present, right? So again, it's something that right now the bulk of this group does not need to worry about, but it would be useful to if you're trying to kind of understand what the SBA would be considering here. It does give some insight into how they'll be assessing that whole economic necessity need. So I think with that, we'll turn it over to the group from Midwest BankCentre to talk about the platform that they're using for forgiveness.
Thanks, Jack. Rick, if you could go, there you go. Thank you. Well, Rick and Jack have provided some great insight around PPP forgiveness. The next portion of this presentation will focus on the actual application process itself, hopefully answering that question of how do I apply when I'm ready. The good news is NBC has invested in a forgiveness platform to assist you through this process. This is an online platform, which is a single place for a customer to easily complete any applications you may have and upload all the required documentations on a secure portal. It provides a step-by-step guidance throughout the forgiveness process, including which forms to choose, which input or what fields to input on, what documents are required, what documents must be maintained, and also how to upload those documents to the portal. Rick, next slide, please. So when do I need to request access? The simple answer is it's up to you, but everybody should have received an email or will be receiving an email today with notification on the platform access and how to access it. If you didn't receive the email, don't worry about it. All this information can also be found on our website, and we will provide that link here in a little bit. But once you've gathered all your supporting documentation and are ready to complete and submit your form, you can request this access to the platform. So how do you do that? Rick, if you could go to the next slide. It's a relatively easy process, and it requires an email to the PPP portal access request at midwestbankcentre.com. When requesting access, we ask you to include your business name, which it would be helpful if it was in the subject line, your loan number, if known, your primary contact, and the primary contact email address. Please note that the primary contact is not necessarily the owner. It's the individual that's going to be responsible for completing the application form itself. The primary contact email address will actually be your username to access the platform itself. Rick? So once you've done that, within a week, you will receive an email from the PPP Loan Forgiveness Admin email inbox, which will include instructions and also a link to the actual logon screen of the forgiveness platform. When you access that screen, you're going to need some information in order to validate yourself. One is the username, again, the contact information, contact email that you provided, your loan amount, your loan account number, which both can be found on your loan agreement. However, if you're struggling with finding that information, please don't hesitate to reach out to your relationship manager, and they can help you with that. NBC has put together a lot of resources around this process. One of those resources is a how-to video on how to access forgiveness, the forgiveness portal. This is a short 2-minute video, but will walk you through the process. I highly recommend you watch these videos. These videos will be on our website too. So all this information will be out there. One of the first things that you will have to do is decide which form you need to select. So Rick and Jack have done a really nice job of breaking down the forms. I think Jack, you did a very nice job of giving a little bit of insight. This is an outline on our website that provides a little bit more information on that. Please remember, though, that the S form, as Jack alluded to, is not automatic forgiveness. Unfortunately, that never came. But again, they did at least make a simplified form. You are still required to supply documentation. And so all that information will be uploaded through our platform. The easy form and the standard form too are similar to what Jack had said, but again, this is just more information out there. Rick, if you could go to the next screen. So when choosing a form, this is actually an illustration from the platform for all borrowers above 50,000. The nice thing about the platform is if you're a borrower below 50,000, the platform automatically defaults you to the S form. Again, there is the one caveat: if you have affiliates in greater of 2 million, we would have to kick you into the other form. But majority of our borrowers that are below 50,000 are not going to have to worry about that, and they will fill out the S form. Again, the platform will default to that. So what you're seeing here is actually an illustration of what you will see if you're a borrower above 50,000. The platform does automatically default to the standard form, so that long version. However, you'll see that there is criteria for the different versions of the easy form that Jack went through. I would just say that a majority of our borrowers are qualifying for the easy form. I would say it's roughly between 70 and 80% that are qualifying for that easy form because of some of those safe harbors that allow you to qualify for the easy form. I would say the remaining 25% that actually use the standard form, I would think 50% of those could actually have qualified for the easy form itself. So it's very imperative that you review this documentation, understand the criteria, and make the proper selection, because there is a lot more work that goes into that standard form. If you're still having questions on what form to choose, reach out to your accountant or your legal counsel, and they can help you with that. But again, there is information in the platform that will help you guide you through this process. Rick? So what other resources do we have for you as a client of NBC? One is a landing page for forgiveness, which is there. On this landing page, there's detail on the different application forms, instructions, and eligibility requirements. We've also invested a lot of time and effort into creating short videos for you on how to, again, what I alluded to earlier, that how to access the forgiveness portal. We also created 2 separate videos on how to complete the PPP forgiveness application for those loans that are under 50,000 and above 50,000. Again, these are short videos that walk you through the platform and how to utilize that platform. So I highly recommend you watch the applicable videos prior to requesting access to the platform. These videos provide some great insight into the platform, but also give you some best practices along the way of how to fill out the application and what is actually needed. So again, highly recommend you watch those videos. The remaining resources are still some other guidance and then tips and tricks to the platform itself. So again, these resources are available for you, and I highly recommend that you utilize these resources.
Hey, Greg, it's Jen. Before
Yep.
we move forward to like timing of forgiveness and all of that, we did have one question on the platform. So someone submitted their completed 3508S to their bank rep in October, and they're just wondering, for those people who did that, will they need to resubmit the application on the portal?
No, not necessarily.
Okay.
We can upload that information. However, going forward, we would just recommend everything come through the platform. It'd just be easier and easier to track.
Yeah, it looks like great resources. So thanks so much.
Yep. So with that, we'll wrap it up with just overall timing. So Rick.
All right, so we can go through a few of the factors to consider when applying. And I know there was a question or two in the chat too about when is the right time to apply. I think the short answer is there isn't necessarily a right time to apply broadly. It tends to come down to more individual facts and circumstances and somewhat what you expect to happen in the future. But we did want to point out a few of the considerations that we're seeing clients think through as they decide when is the right time to turn in an application. One, guidance throughout this whole process. Guidance has been a pretty fluid process. Wouldn't be shocked. In fact, I'd be shocked if more guidance didn't come out into the future with PPP. Sometimes that can be a good thing to wait for more guidance. Sometimes that can be a bad thing. So a couple of factors to weigh, but something at least to consider. Distributions is a reason why we're seeing some borrowers accelerate some of the timing of applying for forgiveness beyond what they might otherwise do. Now, there aren't any explicit prohibitions against distributions under PPP. However, there might be some indirect factors to consider, especially for some of the larger loans, because this is part of the 3509 or 3510 forms out there. Where a distribution might be looked at as a source of liquidity that the business could have used instead of PPP. So depending on what you have planned, if you're going beyond tax distributions and of what you might have normally done, something to consider. Changes in ownership, Jack mentioned already, certainly a lot cleaner not to have a PPP loan outstanding when you go through a transaction. Loan covenant compliance as we hit year end here and even some of the interim dates before this. There might be other loans that you have outstanding that have covenants that are impacted by your PPP loan. So something to consider if you need to clear those up sooner rather than later. Workforce management. Some borrowers may be at a point where they spent their funds, they don't have anything left for PPP, and they need to make some tough decisions. Might be a reason to turn in an application before those are done, though again, nothing that would explicitly require that within the application. And probably the biggest factor that we're seeing and hearing as we talk with clients is from a tax planning. We wish the IRS would just stick with one set of rules and make it really clear what it is. They haven't done that, and in fact, we're hearing rumors of a curveball that might be pending out here. It seems like, well, let me just start over with the issue. Forgiveness under PPP, IRS has said is going to disqualify expenses related to that forgiveness from being deducted on a tax return. The big question is, when are those going to be disallowed? Would it be disallowed in 2020 when you incurred the expenses, or would it happen in 2021 if you don't get forgiveness from SBA until 2021? It seems possible you could deduct in the 2020 return if forgiveness is achieved in 2021. However, we can't say that with any sort of certainty because the IRS still seems to be considering what they want to do around that. There also could be kind of a flip side of that, an unfavorable adjustment if tax rates were to increase and that's when you would have them disallowed or added back. So some planning opportunity to think through. We think there's going to be more to come, and so this will be an area to watch closely as we enter the last few weeks of the year here. But that said, that's all that we really wanted to cover. In addition to the resources that Greg mentioned, and some of these are overlapping, we did want to share a few sites that we spent a lot of time on, and we do have all of our contact information on the last slide here as well. Happy to answer follow-up questions that we didn't get to.
Yeah, Rick, thank
Hey, Rick,
you. Oh, sorry. Go ahead, Jack.
Sorry, Jen, I was just going to jump in on one of them because we did get a couple questions about timing of filing and when people were planning on filing. The original PPP program had a 6-month, no interest, no principal payment period. With the June Extension Act or Flexibility Act, that changed the time periods, when you really need to file for loan forgiveness. So you do have 10 months from the end of your covered period. So if you think about that, if you use a 24-week covered period, so roughly 5.5 months, you have roughly 15.5 months from the date that your loan was granted to apply for forgiveness. And as long as you apply during that period of time, then you do not have to start paying back your loan until you learn what portion of your loan is not going to be forgiven. So once you have a decision from the SBA on loan forgiveness. Now, if you, for some reason, decided not to apply even after that 10-month period lapsed, you will need to start paying back the loan based on its terms, based on the full amount of the loan at that point in time. So roughly month 16 and later, if you did not apply for forgiveness, you would have to start paying back the loan at that point in time. So I did want to make sure we covered that one, Jen.
Jack, thanks so much. I think that's important clarification. We really want to say thank you again to our partners here at Midwest BankCorp for the platform and the time to share this information. To the extent that we did not get all your questions answered, we do want to invite you, as Rick said, to reach out to us using any of these platforms. We have year-end planning webinars that cover a lot of this material as well as some other things post-election. So there was one, you can definitely access the recording from last week, as well as the one coming up tomorrow. All of that information is on the webpage. And then, of course, we have the weekly live streams on Thursday afternoon through the YouTube channel, as well as a resource for you where you can input your live questions very similar to this platform. All that said, I want to say thank you so much. I'll hand it back to Greg to close us out and wish you all a very safe and healthy next few weeks.
Great. Thanks, guys. Well, again, we want to thank all of you guys for coming. Hopefully you got some great information from this. I think the CLA team did a fantastic job of putting this together. So thank you guys for your assistance with this. Again, if you have more questions, don't hesitate to reach out to your Midwest BankCentre representative, or you can even reach out to the CLA team as they provided their information too. An email copy of this presentation will be coming this afternoon, and we just ask you to complete the survey. And again, thank you for your time, and we look forward to continuing to serve you through any of our products. So thank you.